Hey guys, Joe Baker with Trade Pilot Pro. Today I want to talk to you guys about money and the Fed. I want to talk about what they do on CNBC. I'm not a conspiracy theorist, though I do want to make note. The information that Bob Pisani gets on the floor is from floor traders. Okay, these are guys that if you guys are in futures markets or in stocks, you're trading against them. And they're always fading us one way or the other. So, if you want the public to be on the wrong side, which is what they really kind of do, you'd want to, get that information out to him, the best you can and have him report it to us over the TV airwaves. And then, we take positions and they fade us. So, I'm not, like I said, I'm not a big conspiracy theorist, but I just want to make you aware of it. I've been doing it, quite a bit. And it's always worked for me. I love fading him, and I just want to make sure that you guys understand how the open market operations work, because I know that they've been mentioning it lately, and it needs to be said. There's $30 billion coming due today. Okay, so what the Fed does is they roughly maintain 40 billion, 45 billion in the banking system itself, but it's always rolled over. So let's say I take a loan out for $1 million. Okay, the loan comes due tomorrow. I take the million, I pay it back, but at the same time, I'm actually writing a new one for another million. So it's a wash. Okay, everyone thinks I just got a loan for $1 million, but I just paid off the other one. So it's always a kind of a wash. Now, there are times when there's a net add to the system. Okay, say they're expiring 20 billion and they add 24 billion on a 7-day repo. Then there'd be an extra add for 4 billion for possibly 7 days, but you got to remember the ones prior are expiring too. So you really got to kind of keep track. And what we're going to do is we're going to make this public here soon. We're going to put it. We're going to put it into a spreadsheet so that we can track it on a daily basis. You do have to put some history on it. It takes a little bit to do the work all the time, but we're going to do that for you guys and make it public for you. Right now, as you know, there's 30 billion of repos that would due in today. Okay, that means they were expiring. Okay, so what I'm going to do is I'm going to show you basically how they do their repos and what it looks like. Okay, here's the first slide. This is today, Thursday, October 11th at 8:30 a.m. They did a 14-day repo. Okay, remember now, 30 billion is coming due today. So we got 6 billion in at 8:30. Okay, you notice the futures really cranked up this morning. And I think they did in anticipation of knowing that there was going to be a lot of money injected, and you guys would know about it, and everybody would get bullish, and they'd fade this. And this is why I think the market's doing what it's doing, but it's just a thought. Here it is again, 9:40, 7-day repo, 20 billion. So there's 26 billion right there, folks. Okay, there's 26 billion coming in. Like I said, I was out for a good part of the day. I don't really know what was reported, but if he was out there, telling everybody that the Fed was injecting money again and everything was great and everyone buy stocks and go long and we're going to all highs, this is a classic fade trade by them. Okay, here it is again, 950, another 9.5 billion. Okay, folks. So, we have a net add rate of now of 4 billion. Okay, but we don't have, we don't have the 34 billion that they put in. It's really only 4. Okay. As you see, this is a 1-day repo. So this is due tomorrow. Okay, the others were longer time frames. They'll typically go 1, 3, 7, or 14. They do permanents. The permanents, they stay in the system itself. They're not going to come out. They inject liquidity after September 11th when the market was really bottoming out. In 03, they did a permanent. I think they did actually a permanent back in July, I think, when they had that big sell-off, they did a $1 billion permanent as well. That means they just put the money in, they leave it. Those are the ones that count. Those are the ones that matter. Okay, these ones on a daily basis, it doesn't really matter what they're putting in. It's what's really coming out, and then you can kind of do the math on that. So tomorrow, you see, we're going to have a $9.5 billion draw, plus whatever's coming due from prior days. Here's another one that was yesterday, okay, that was due today, okay? So $16 billion due today that was put in yesterday, okay? Again, this is every day, guys, okay? Every single day they do this. So it's not new. It's nothing they're starting to do. Like they said, oh, the Fed's picking up. Oh, they're really reacting. They're putting money in the system. I'm like, they do it all the time, guys. Come on. To me, it's fleecing the public. Here's another slide right here from the 9th. It's due on the 10th for $12.5 billion. I mean, guys, it's in one day. It's out the other. Okay, so if he's going out there telling you, everything's rosy and you should be buying stocks, he's got brain damage. Okay, and I'm not bearish. I'm just trying to make a point here. Here's a 14-day repo put in on October 4th. Okay, that's a 14-day repo. That's a nice repo. Okay, it's got 14 days before we got to pay that back. So that gets, what this is, adds a lot of liquidity to the system. Everybody's pretty happy. It went in at 9:30 in the morning. Great. Everything's wonderful there. Okay, here's another slide. Same day, 7-day repo, $24 billion. Guess what, folks? Maturity date, October 11th, today. All right, so that's part of what's coming out today. That's why today's injection of liquidity was so large. It was because this was expiring. So really, it's a wash, guys. I just want to let you know that I'm trying to look out for you, trying to give you the most information I can. It took me years to learn all this stuff. Like I said before, I can get you guys years ahead than where you currently are now. I'll keep posting these webinars. I hope you guys learned something from it. I just want to tell you what the temporary open market operations are. That's what this is actually called. It's to implement monetary policy. Short-term repurchase and reverse purchase agreements are used to temporarily affect the size of the Federal Reserve System's portfolio and influence day-to-day trading in the federal funds market. Okay, guys, that's what it is. Okay, if you go into that and you see temporarily affect, okay, grab those words, temporarily affect, and then go down one line and go influence day-to-day trading. Okay, that's what the Fed does. Okay, they provide liquidity into the system so that these guys can go in there, buy their stocks and their bonds and so forth and so on, use it as leverage and get back in there. And they're actually taking mortgage backs, which is a good thing. They've never done that before, so they have since this fallout in the subprime market. So I will keep you guys posted. We'll get back to the technicals later, but fundamentals are good too because they do work. We can't always just trade off a time chart. But anyway, guys, I want you to let you know that was trade zone. This big sell-off was trade zone 6 today. In the future, I will be adding the zones. I'll be going over what we do. There are 9 trade zones by time, so that's kind of our edge in the market. We're able to actually know it's coming. It's that way. It's not like we're not aware that a trade's coming up just by time only. Again, we do some fundamental throughout the day as well as technical. So we're not getting ambushed. Okay, we know there's a trade coming in. Okay, so we know what's coming in about roughly it's within 10 minutes of our trade zone. So we know it's coming. We look at the indicators and we say, okay, what are you doing? What's it doing? We're looking for something. It's kind of like something's there and you're looking for it, as opposed to walking through the dark and getting ambushed. Okay, so again, we use the technicals. We love the technicals. We've got so many proprietary indicators we've built. We try to do the best we can with those to get you on the right side of the market. Also, we do use a little bit of fundamental analysis as far as what's going on with, obviously, the open market operations on a daily basis. It happens every single day, guys, every single day. And then, obviously, time of day is big as well. So that kind of gives us our edge. And as you know, when you're trading in futures markets, we're trading against each other. So, it's kind of important that you get on the right side of these trades. All right, guys, I hope you learned something from this. I'll be back later on, and take care.